Wall Street is regaining losses after two-day panic selling, triggered by a nosedive of oil prices. The US dollar is winning favor with investors as a safe haven asset amid the pandemic. It's trading at elevated levels despite a correctional decline today. The US currency has loosened its grip against the Canadian dollar, even though long positions on the USD CAD pair still make sense. The situation in the oil market seems to be less dramatic than on early Monday. June WTI contracts rose above $12 a barrel in the early New York trade. Nevertheless, its price is almost 80% lower than a January's high. The reason behind the crater in the oil market is a sharp decline in energy consumption that generates an oil glut. A slump in the oil market dampened appetite for risk, thus halting recovery of global stock markets. Today, futures on benchmark US stock indexes are drifting higher. Market sentiment brightened up in light of better-than-expected reports on corporate earnings. Earlier, US companies had warned of serious losses due to the pandemic. The Dow Jones gained nearly 1% in the early New York trade. Futures on benchmark US indexes shed 2.3% in the previous 2 days. Yesterday, the US Senate passed a package of financial aid worth $500 billion to shore up the national economy. Markets seem to believe that massive stimulus measures will be enough to mitigate the economic damage from the coronavirus. Meanwhile, investors are wondering how and when the US economy will be restarted. Governors and healthcare authorities have not settled yet the best option of easing lockdown measures. On Wednesday evening, the US dollar index is trading lower at near 100.05, the level of yesterday's opening. However, the greenback finds support from high demand for safe haven assets. The oil market has been a roller coaster. Besides, global stocks are trading under higher volatility with the prospects for a further decline amid the coronavirus pandemic. Investors are betting on the US dollar's strength. The greenback could resume a rally any time, especially in response to any negative information, which could be corporate reports of US companies as their revenues and market capitalization were badly hurt in the recent months. News on the pandemic front also could encourage a flight to safe haven assets, including the US dollar. The USD CAD pair climbed to about 1.42 for the reasons other than falling oil prices. Traders are selling the loonie for fear that the downturn in the oil market would worsen the crisis in Canada sparked off by the pandemic. On Tuesday, investors found out that retail sales dropped in February. Today, market participants are evaluating another important metric, a consumer price index. The Canadian dollar is losing ground against its American rival on the back of fundamental factors. The technical picture is also not in the loonie's favor, indicating growth of the currency pair. Having tested the local high at 1.4180, the pair aims at the area of 1.43-4350. New support and the lower border is 1.4060-4120. From this level, the pair could make a correction and resume a climb to 1.43. Since March, the Bank of Canada has slashed the key interest rate by 150 basis points and started purchases of local government bonds. The regulator dropped a hint that it could expand the bond buying program in case domestic economic conditions change for the worse. So a low CPI could be another argument for the Bank of Canada to soften monetary policy once again. That's all for today. We wish you profitable deals and see you on our channel tomorrow.